about stocks this week? The Nifty rallied 10% this month. We'll tell you how or if you should ride these markets as well. Our investment advisor Gaurang Shah tells you why you should be investing in Maruti Suzuki for the long term. And Gaurang has made a profit of 115% in his portfolio, beating the Nifty by 65%. We'll tell you how you can make similar returns. Welcome to All About Stocks. Thank you so much for tuning in. I'm glad you tuned in this week because it's been a very, very exciting time at the market. We were nearly shy of 9,000 on the Nifty, and there are voices in the market that say we might see it happen next week. But that's not something that concerns us too much because we're here for the long term. We're here for the next 4, 5, 10 or maybe 20 years. And the idea with this show is to help you make money and get very, very rich over the next 10 years. We'll also answer the questions you sent in during the week. Remember, email ID is at the bottom of your screen. And you can reach me personally on Twitter as well. But first, to bring you up to speed with everything that happened while you were in the office, my colleague Ajay is standing by with an update on the market action. Ajay.
Well, Faye, this week's market performance can clearly be divided into two halves. Till Friday, the market was in the midst of a very strong momentum, almost on a daily basis, or almost till Friday. For the last 10 days, we've been adding on to gains. Bank Nifty was clearly the leader. Other interest rate sensitives like capital goods, power stocks and other high beta, high quality stocks were also rallying hard. FIs were regularly, infusing capital into the markets, both on the cash side as well piling up long positions on the index futures side. Global markets were extremely supportive, and third quarter numbers were almost in line with what the street was estimating. But on Friday, there was a massive change in sentiment which was witnessed on the street, and we collapsed on the Nifty as well on the Bank Nifty. In fact, the entire market came down, almost knocking on the 9,000 mark as far as Nifty goes. And this scaling back was also led by interest rate sensitives. Banking in particular lost about 3% on Friday. So optically, you may look that the benchmarks were almost flat. Even the broader markets are flat. But actually, the performance this particular week for the market was entirely different. Till Friday, it was in the midst of a strong momentum, but Friday things changed. Fundamentally, people believe on the street that the first patch of earnings, usually which has the better performing companies reporting the numbers, is over. And we've been gaining a whole lot. In fact, the January series gained 10% on the Nifty, 11% Bank Nifty, and realty and capital indices gaining 14%. Most of the positives from the budget or the earnings or the liquidity in the global scenarios almost in the price. And hence, Friday started some amount of correction into the market, which may well last in the next week onwards as well. And the earnings also would be slightly on the lower side. However, strategists also believe that the market may not be falling a whole lot, and this correction would be shallow. And there are still high probability that a pre-budget rally may start forming around the mid of the Feb series, around the 15th. So structural call remains bullish on most strategies we spoke to, but tactically some amount of correction may last for a couple of days.
All right, Ajay, thank you for that update. I'm very glad with the guest in the studio this week. Gaurang Shah, Vice President at Geojit BNP Paribas, is in the studio. Gaurang, first of all, it's so nice to have you in the studio instead of the
Yeah, we normally do it. I'm in my office and you're in the studio. So it's a pleasure to see you after a very long time.
It is nice to have you here. We've had a very interesting time at the market. There was a lot of excitement about the possibility of 9,000 on the Nifty. I want to ask you this. We have been, if we look at the last couple of months, one of the strongest markets in the world.
True.
Is it largely still sentiment and oil prices and things like that? Or would you believe that our fundamentals have caught up?
Well, firstly, I think that the ground level reality for good has yet to roll out. We have just seen the first phase of a steady government coming in place. The secondly, we have seen top-down interest rate scenario. We've seen a steady currency. We've seen corporate good, of course. Today, I beg your pardon, on Friday, it was not all that green. It was more of the red color that was spread all across the sector, starting with banking, of course. Of course, and then you have the government policies which need to be rolled out and have its impact on the ground level. So my guess is that we may not see the similar performance, we may not replicate the similar performance that we did in 2014. But yes, even if I have to shave off 50% from that, then at least we can go at 15 to 20% on index I'm talking about. And of course, over in that particular scenario, you will have certain outperformers, certain underperformers, depending upon the corporate growth, earnings visibility, and the government policies that will be rolled out. So I still believe that, the problem for is that we have not seen these 29,000 plus levels on Sensex and close to 9,000 levels on the Nifty. And when we see these corrections of 518 points, we only see it in terms of numbers, but in terms of percentage, it's really not too much. Okay, I agree to the fact that in those corrections, you may have certain sectors which will take a sharp beat, but they deserve it because their earnings visibility is not there. I'm sorry to say that.
So if you were to analyze the entire basket of numbers we've seen so far in terms of sectors, where would you think that beating is going to be most due?
Okay, the knock that will be taken on the chin first will be real estate, aviation, power generation, infrastructure to a certain extent, hospitality industry, and shipping. I think these are the broad areas where one needs to be a little bit cautious, especially metals, because that's one particular sector where that I feel that it will need at least about 8 months to a year time for things to really shape up and numbers to look good and consumption to go up. Now this is domestically, and that extended period might be in terms of exports as well. So I think the one sector that you need to avoid for now is metals.
All right, so the list of sectors that you just gave us, and we're going to run that on the screen as we talk, would you recommend as long-term investors, I'm here for the next 3-4 years at least, should I be exiting these particular sectors right now, or moving into other interest rate sensitives or things like that seem to be slightly
I would say that it is better that you move out and look at it, because if you are betting on 3 years time frame investment and then recovery, then if you have a change or you move out from underperforming sectors into a performance, by 3 years time I think you'll be making a decent profit. So my point is that if you are going to bet for 3 years, you will make better money in some of these sectors which will possibly look front runners of the recovery cycle that we are talking about, at least for the next 4 years and 6 months till the time this government is there.
Do you expect, like we've seen in the month of January, interest rate sensitives to continue to rally? Because if you're seeing interest rates sort of on a downward curve, then everything in that pack will continue to do well. Is that the expectation?
I think I was one of the guys who was not expecting a great cut in December. And I also mentioned at that point of time that before the budget, maybe in month of Jan, we may see a small token cut coming in from the RBI. Wishful thinking has happened. And I also believe that for the next year, if we are talking about calendar year 2015 December, we will see at least 2 more rate cuts in form of 25 bips, 25 bips. So interest rates cut is definitely going to augur well for the finance, for the banking. And if you're betting on an economic recovery, then I think your backbone has to be financials and banking. And unless that is in shape, your recovery is, half-lived.
All right, so that's very interesting to keep an eye on those interest rates and, of course, keep an eye on banking stocks. And remember, just added piece of information, if we finally see a 100 basis point cut on interest rates and that gets translated to your home loans, that's a 7% cut on your EMI in general. Let's take a few questions that have come in for Gaurang. Jeet Singh has written in, he has 50 shares of Divan Housing, which he bought at 424 rupees, and 100 shares of ICICI Bank, which he bought at 348 rupees. Divan Housing is on your screen right now. Within the housing finance pack, is that the best option?
I would prefer something like an LIC housing. And this particular stock was virtually written off close to about 250, 260 odd levels. Nobody was willing to even look at the balance sheet. And absolutely not interested in what the earnings visibility is. We remained quite strong and we did cover that particular stock. We still maintain a positive outlook. So I would say, depending upon looking at the pedigree, looking at the asset quality, looking at the earnings visibility, looking at top-down interest rate scenario, of course, Divan Housing and other likewise housing agencies will get benefited. But if I would be there, then my preference would be LIC housing. That's as a disclosure, we do have positive coverage.
All right, and because we're talking about banking and interest rate sensitives, ICICI Bank, now that's on your screen as well. There was some asset quality, concerns when their numbers came out, but I know this is a stock that you particularly like.
Yes, so and I was on one of the channels when the numbers rolled out, unfortunately, and the numbers were quite disheartening. Yeah. And I would say that let's hope, if you have to believe Mrs. Kocher about what statement she made, I only hope and pray that this is the worst of the quarter that we've seen and things will start looking a little bit better.
But do you have any reason to believe things will start looking better?
I would say that the top-down interest rates and impact of government policy rollout could stand to better off the chances of banking sector. Unfortunately, like the numbers we've seen for ICICI Bank, could get better.
Okay.
Asset quality and provisioning are the two big hits, or the knocks, I would say. It was a punch that came. The growth on the top line, bottom line was, I think, in line with expectation, but what the markets did not like is the asset quality and provision fare. So I believe that let's hope and pray that...
Gaurang, tell me this, if I have ICICI Bank in my portfolio right now, how many more quarters do you want to watch it for?
I would say that at least give it 2 or 3 quarters, because I think that much of time will be required for.
All right, those are Gaurang's recommendations. Now, we asked him to pick one stock that you and I can invest in right now on Monday morning at these levels, and he's been kind enough to pick Maruti Suzuki. Now, Maruti ended the week at 36.47. We know that it's set up 3 plants in Gujarat. We don't know exactly what's going to be produced at those plants right now, but there are a lot of very interesting announcements coming in from Maruti. I want to pull up the 52-week stock. Just take a look at how it's gone 100% on that stock. I'm not surprised this is on your list right now, but tell me, how much further can Maruti go?
Well, just look at this. By the virtue of the steps that the government will take, and every individual will have an additional amount of income to save and to spend. You have new launches coming out from Maruti, and that's not restricted only entry segment or the mid-size, compact sedan kind of a vehicle. We are talking about a small SUV, similarly on the platform of Vitara, which was not all that successful. Ciaz has been launched, but has not really met up with the kind of expectation and demand that the management thought. We expect another launch to come through in this particular category. Upgraded and a new facelift model of the earlier SUV Vitara is expected to be coming out and rolling out of the shed. Facility in the land acquisition in Gujarat and putting up a plant, I think that should definitely augur well over a period of time. And of course, the demand in the domestic market, it has always been the PV segment #1, that is passenger vehicle segment, #1 car, preferred car. And my guess is that export market is also going to look much more robust. So given the fact that you have new launches, you have a new production facility, you have a parent by the virtue of Suzuki willing to assist you in all sorts of technology and platforms available, I think this particular stock can only go miles ahead. You may have bouts of correction, and of course interest rate cut, that's augur very, very well.
What's your target on Maruti?
4,050 is what we are working with, and the numbers were super. And if they are able to deliver similar kind of run rate, and if the interest rate scenario cuts down much at faster rate than our expectation, then definitely we will revise this target upwards.
All right, and if I get in at this point, where Maruti is at this point,
right,
what ideal time horizon should I have on this stock?
At least 1 year fair, because we need all these possibilities to roll out. I think 1 year is justified, max 1 year. Shorter term, the way markets are reacting, I will not be surprised if the targets are met, because my earlier recommendations I'm given to understand have met up with the targets that I have took for 1 year. So this is a conservative target that I'm talking about.
Time for a quick break, but stay with us. When we come back, we'll talk about Gaurang's own portfolio. We'll talk about stocks like Mindtree and M&M. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Gaurang Shah is still with us in the studio, and we're figuring out our strategy for our long-term portfolios. Now, this is why we take Gaurang's advice so seriously on this show, because he was kind enough to design a portfolio for us in December 2012. We've been tracking that portfolio ever since. It's currently at an overall gain of 115%. The Nifty over the same period is up 50%, really outperforming the Nifty on this portfolio. Gaurang, thank you for the strong portfolio, and congratulations. I want to give our viewers a quick lineup of the stocks in this portfolio. IndusInd Bank is up 100% since we bought it. Sun Pharma, Godrej Consumer Products, Havells is up 252%. M&M, Wockhardt, Mindtree up 280%. Apollo Hospitals, Eicher Motors is also up 250%. And Infosys. Gaurang, I understand you're not making any changes in your portfolio, but I'll ask you an obvious question that a lot of our investors are asking at this point. If I see a stock that's up 250% and there are 3 of those in your portfolio, should I be taking my money off the table? Because there's always that feeling that, it's all notional right now and I might lose it soon enough. So what would you recommend any investor in your position does at this point?
I think out of this 10 stock that I have in my portfolio, 8 of them have started to get re-rated by other broking agencies. So if I'm landed in a very safe zone and if I'm making 130, look, it's all the matter of risk appetite fair. If I see a gain of 100% plus, I would definitely be tempted to book some profit. In fact, I was going to make some changes, but unfortunately I couldn't work on my new portfolio. That's why I'm continuing, but next time I would definitely want to make some changes. So if you are of a low risk appetite, and if you have an event like a budget coming, and if you're making 100+% return on your portfolio, I would say that at least take 50% off, so that you are safe. And that 50% you sit on cash. Pray that there is something goes wrong during the budget.
Ouch.
So that I can go and invest my money and buy chops.
But there's always that feeling that, okay, if I take 50% off and everything goes well with the budget and the market rallies,
well, you still have money to buy.
Budget
is not going to be restricted only for 2015. You are going to see at least 3 more budgets or 4 more budgets from this particular government, and this is only the beginning. Like I said, we are at a very nascent stage. Only problem is fair that we have not been at this level. We have not seen this. So that's the fear. And whenever something unknown is there in a larger scale, the human tendency is to react first from the negative side. So I guess that's the human tendency. But minus that, if you look beyond, then there is tremendous amount of growth. So it all depends upon the risk appetite. Okay, even if the budget is not all that negative and the market reacts on the positive side, I would say, why are you losing heart? You have money, and that's the profit that you made. You still have 50% invested. So you're not going to be losing any.
So if I have a larger risk appetite and I'm willing to take on the risk at this
point, hold on to it, definitely.
Hold on to it.
There's a long way to go for this portfolio.
All right, there's a long way to go for this portfolio, even though we're up 115%. Here's a list of the stocks in the portfolio one more time so you can write them down. There's IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Wockhardt, Mindtree, Apollo Hospitals, Eicher Motors and Infosys. 10 stocks, 10% in each stock. If you have any questions about that portfolio, feel free to write to us. We'll have Gaurang answer your questions for you. All right, let's take a few more questions that came in during the week for you, Gaurang. Raja has written in, 10 shares of Eicher Motors bought at 14,597 and 100 shares of Lakshmi Vilas Bank at 86 rupees. Should I hold on to either of them? Eicher Motors obviously in your portfolio.
Yes.
You just said hold on to it. So you recommend he holds on to it?
I would definitely say hold on to it. And if you bought Eicher, why on earth you would want to go and buy a Lakshmi Vilas Bank? I don't understand. I'm sorry to say that.
But he has bought a Lakshmi Vilas Bank.
So I would say that make a switch, go into a DCB, and we have a positive coverage. That's my disclosure.
Why DCB?
I think it's one of the lesser known private sector banks which has been a consistent performer. Okay, you take a well-known bank like an IDBI and you take an DCB and you compare it over the last 1 year. I think the data will tell you the fact that is there. So it has been a consistent performer. We have recently upgraded our targets on DCB. A conservative 145 or so from current 120 or odd levels. Numbers and interest rate scenario, and that impacts the banking sector including DCB. If there's something much more than bright side of it, then definitely we will revise it upwards. But I feel that DCB is better than something called like a Lakshmi Vilas Bank in terms of growth.
All right, so they make that switch there. Sangeeta has written in, and we're always partial to women investors who write in. She has 1,000 shares of TVS Motors, which she bought at 306 rupees, and 2,000 shares of Punjab National Bank, which she bought at 220 rupees. Should I hold on to both of them? Now, all of the things you said, most of the things you said about Maruti Suzuki earlier also applies then to, the two-wheeler segment. Yeah. But within the two-wheeler segment, TVS Motors?
I think it is one of the stock in the two-wheeler pack which has actually given, if you compare it over the last 6 months, 1 year, a super performer return. Can it compare it to a Bajaj Auto or a Hero MotoCorp? And in terms of growth visibility, I think the technical tie-up with BMW motorcycles for the launch of 350 and sub 500cc motorcycles, which may happen by somewhere mid of 2015 or end of 2015, will definitely give them a very niche edge. I would definitely recommend to hold on to TVS Motors, and of course their own products are selling very, very well, especially the automatic scooter segment is very familiar and famous amongst the women travelers, and I would say that it has given an incremental boost on the top line and bottom line, and of course so is the case with the three-wheeler and the two-wheeler motorcycles that they have, so hold on to it. The other one was Punjab National Bank. Well, here again, keeping in mind the numbers that were delivered, unfortunately, the NPA hit coming on even private sector banks. I would say right now, hold on to it. Look for a target of somewhere close to about 235 on PNB. On TVS Motors, 245 should be the target as of now.
Time for us to take a quick break. We come back, we'll talk about stocks like IDFC and ITC. Don't go anywhere. Thank you for staying with us. You're watching All About Stocks on ET now. Gaurang Shah is with us as well. And it's time for us to look at the portfolio of our one lucky viewer. Now, every week we pick one viewer and we'll take a look at your entire portfolio. This week, Madhav is our lucky viewer. He sent us a list of stocks. Now, unfortunately, we don't know if these are the only stocks in his portfolio or he picked them out for some reason and sent them to us. 100 shares of Asian Paints, which he bought at 649 rupees. Hold on to Asian Paints.
Definitely, and that's one particular stock that we've been extremely positive. Falling crude oil prices augur well for the paint industry. Numbers were a little bit disappointing, but I guess it's one-off quarters. Look for a target of 985 on Asian Paints, present in domestic and international.
You know, I'm tempted to ask, if you're not very bullish on the real estate industry at this point, isn't Asian Paints then tied to that?
Well, you already have houses that need to be painted, so replacement market itself is big enough.
All right, so bank on the fact that everybody's going to be redoing their houses on the inside before Diwali. IDFC, which he bought at 150 rupees. Hold on to that one.
Yeah, I think it's the momentum is just setting in, and rollout of banking operation would re-rate the stock. As of now, work with the target of 185 on IDFC.
All right. He also has 125 stocks or 125 shares of ITC, which he bought at 365. Now, after everything we've said about the fact that ITC is moving, you know, more and more away from the cigarette business, so they have other businesses that are pulling their weight in the company, the stock hasn't done much over the last couple of months.
That's thanks to the government and the health ministry, because they are planning to ban sale of loose cigarettes, public smoking. Of course, I'm not endorsing it. I'm also quite conscious about it. But the fact remains fair that they still have a large portion of top line and bottom line contributed by the tobacco-related business. So I think the new investment that they are planning to do will take time to shift the focus from the cigarette business or tobacco business onto the other ones. We are positive on the stock. We have a positive cover. That's my disclosure. I'm working with a conservative target of 425. But yes, the overhang remains in terms of tobacco sale ban, product ban, I beg your pardon.
All right, let's also take a look at the other stocks in his portfolio. 200 shares of Biocon, which he bought at 510 rupees. That's the only stock he's losing money on. The stock ended the week at 414. Biocon?
You need to have a longish horizon. R&D investment has drained down the cash, but I believe it's incrementally positive for the years to come. New manufacturing facility in Malaysia, if I'm not mistaken, the management mentioned that will be going on stream for commercial production somewhere in 2016 and 17. So you need to have at least 1.5 year plus kind of time frame for these positivities to emerge. As of now, hold on to it for a target of 445, but keep in mind, you need at least 1.5 to 2 years plus kind of time horizon.
Okay, so that's unfortunately a wrap on the show. But before we close the show, I'm required to ask you for your disclosure, Gaurang.
Well, I do drive a Maruti car. I don't have the share. That's my disclosure. Other than that, no personal holding in the stocks and the recommendations that we've had on the show. But the recommendations to our clients have gone on the similar line.
All right. It's such a pleasure to have you in the studio.
Always a pleasure.
It's been a tremendous show. Thank you so much for joining us. If you have questions for Gaurang, feel free to write to us. Email ID is on your screen. If you want to reach me personally, of course, you can always do so on Twitter. Thanks for watching.